All right, everyone. Welcome to Hold Bitcoin Hedge Smart with Futures. This episode, we're going to be talking clearly about how we use more intelligent ways to use futures to manage our price risk on Bitcoin without having to sell Bitcoin. Now, we've had a little bit of a controversy on X with people thinking that I'm advocating to sell Bitcoin. That is absolutely not the case. And I think we should be using a much more smarter approach to how we manage our price risk with Bitcoin without ever having to sell our Bitcoin. Let's dive in. Is this a bit of a different format? Are you getting a bit of a feel for me? Getting a face to the name. How exciting is that? I'm excited. Now we're going to go into a bit of a topic today, but we're going to be using my newly minted face to discuss it, which I think is really exciting. So let me know what you think of my face. So what we're going to be thinking about is a key set of mindset shifts that we need to understand in order to make good decisions around avoiding selling our Bitcoin, despite maybe us having a temporary short-term bias towards Bitcoin. And that's how we can avoid doing things like attracting capital gains tax or things like that. So what we need to think about is not thinking like a trader, but thinking about being a commodity risk manager. And we need to think and separate our physical exposure to Bitcoin, which may be our underlying exposure generated through owning cold storage Bitcoin, versus our financial exposure, which is our true exposure when we net off any financial instruments or derivatives on top of that. So for example, our physical exposure is Bitcoin, it's sitting in cold storage, or maybe a tiny little portion of it sitting in an exchange account as collateral. And then we have our financial exposure generated by our derivatives like futures and options, and we can net those off to understand what our true exposure is. And we need to think about managing delta, not managing buying and selling. So we're not buying Bitcoin and selling Bitcoin. We have our Bitcoin stack. We want to add to it. We want to create more Bitcoin through our holdings, but we're not buying, but we're going to manage our delta. And our delta is a really key concept. And then we're going to think of it in terms of income tax, not capital gains tax. It's really important to understand that when you're dealing in futures derivatives, like generally, depending on the jurisdiction that you're operating in, futures income generally is income tax and not capital gains tax, whereas every time you sell and buy your Bitcoin, you're creating these taxable capital gains events that can create havoc in your portfolio. So let's explore. Again, not financial advice. So what do we mean by being a Bitcoin standard investor? This is a key mind shift step we need to make as well. So we need to think in terms of a different hurdle rate. Now, when you're a typical old school fiat investor, you generally think in terms of I've got to achieve a return on investment above that of the consumer price index plus some sort of risk adjusted return, and that's my hurdle rate. And what you're maximizing for is more consumption power, right? Like within the economy that is growing, you want to have higher consumption power because you're beating the rate of inflation, which means that you can buy more chocolate bars and more consumer items and more groceries, et cetera, et cetera. This is kind of bullshit. I don't really like it. And this is why I consider myself a Bitcoin standard investor, which actually has very little to do with Bitcoin, but it changes the hurdle rate in which we invest. And that is, we think in terms of monetary expansion plus a risk-adjusted return. So what we need to think of is that the monetary expansion is baked into the Bitcoin return anyway, because Bitcoin is a fixed supply asset. And so what we want to do is change our hurdle rate to this monetary expansion plus a risk-adjusted return. And rather than have this idea of more consumption power, we think more share of the economic pie. And that is how we invest on a Bitcoin standard. I keep all my capital generally in Bitcoin. I focus on increasing my Bitcoin than concerning myself with my fiat balance. And this is part of being a Bitcoin investor. And if we're making sure that over the long run, we're beating monetary expansion plus a risk-adjusted return, we should be increasing our Bitcoin stack when denominated in Bitcoin. And so that becomes a really, really powerful concept when investing. But this means that we don't really want to buy and sell Bitcoin. Bitcoin's our base capital. And what we want to do is do active rebalancing depending on if it's strong or weak. And we can do that without selling Bitcoin. The second mindset shift we want to make is thinking in terms of a trader, trying to predict price. That's not really our thing, or take profit, stop loss, into a commodity trader. I manage price risk, right? We have a lot of Bitcoin capital, and we want to manage our price risk on that Bitcoin capital, and we have to be exposed to Bitcoin capital, just like a commodity trader. An oil company has to be exposed to the price of oil, and a dairy company has to be exposed to the price of milk, and a corn company has to be exposed to the price of corn. And we have to be exposed to the price of Bitcoin, but we want to manage that risk. And so what we have is this idea of like buying our commodity, which is our cold storage Bitcoin. Generally, if you're like a oil company, you'll do some process of that oil, and then you'll sell that resultant output. And what we want to do is manage the hours without necessarily any value add, because we're trying to create additional income on our Bitcoin stack. So a price risk manager thinks in terms of physical and financial exposure. And the easiest way to think about that is like, I've got 10,000 barrels of oil, and maybe I'm short 4,000 barrels of oil on the futures market, which means that I have a net long position of 6,000 barrels. I may have 10,000 barrels of inventory. I may have a big storage area with 10,000 barrels of oil in it. But because I've got short futures contracts, I know that my total long exposure is only 6,000 barrels worth. Now, that is how a risk manager thinks in terms of its exposure, rather than a trader who is more worried about like, oh, I want to like buy or sell barrels because I'm trying to predict a price going up or down. We're focusing on our exposure, not prediction. So let's take that same mentality and think about physical ownership of Bitcoin, as in I've got Bitcoin in cold storage, maybe 90% of my Bitcoin's in cold storage, and I have about 10% of my Bitcoin on exchange as margin collateral for the futures derivatives that I'm taking. And then I probably have a short or long futures position. So in this one, I've got 100% of my physical Bitcoin exposure, and I've got some sort of short futures position, maybe like 30% worth of my total Bitcoin exposure. And that gives me a long exposure overall of Bitcoin of like 70%, right? So this is how we think of our physical versus financial exposure in a Bitcoin context. The beauty of Bitcoin futures is that they generally attract income tax, right? Because your futures trading is like an income, whereas when you're dealing in change your physical position, so if I'm buying and selling like literal underlying Bitcoin, I'm finding myself selling Bitcoin and generating capital gains events, and I have to like basically give up some of my Bitcoin in order to wear that capital gains, and then I have to go and like create a return over and above that, and it becomes very, very laborsome. It's very, very hard to do. Rather, I keep my Bitcoin, I create no capital gains tax, but I have a short and long futures position, and the net P&L of that futures position generates a tax obligation, which is much, much cleaner. And so we find ourselves not having to sell our underlying Bitcoin. The other advantage is that when we deal in settlement of futures, of the physical position, is that it's generally slow. It takes days and hours, right? If we go on Bitcoin and we want to go send our Bitcoin to an exchange, and then we have to like sell it for fiat, and then we have to process it through into the bank accounts to get access to it, and then we finally have to like send it back and then convert it back into Bitcoin and then send it back into cold storage. That can take days. Like it could take days, hours minimum to actually occur. Whereas changing our futures position can occur in seconds, right? I just need to log on to my exchange account, alter my position, and in a couple seconds, maybe a few minutes, if you need to log on, you can alter your position, and that means that you're much faster and much more responsive to the market. So this is why you generally don't buy and sell underlying Bitcoin. You hold your position of Bitcoin and you adjust your exposure to the price of Bitcoin using futures. We can review how we would actually do this in real life. This is the price of Bitcoin with the Mangosteen original framework applied. And what we can see is that we've been bearish for the most of the time since October. Obviously, that was our peak around October. We came down and we've come down. And for the most part, we have had a negative 38% return on Bitcoin in the last 12 months, but the Mangosteen BTC original framework is up 75 odd percent. So that's pretty fantastic. Now, generally, during these periods, what we'll be doing is we'll have all our Bitcoin denominated in Bitcoin. We don't sell anything, but we get a bearish flag. So what we might consider doing on our own volition is to add a short futures position that we wear down here. Not only does it take, not only did it make money in this instance, it also took out a bunch of volatility. So when things went down, we didn't wear all that horrendous downwards outcome, and we made a quick profit. That profit would be considered generally as income tax. Then we would have made a small loss on this trade. We then would have avoided this horrible downside, which went really, really well for us. And we again would have clipped the ticket through adding a short futures position, not selling Bitcoin. and then adjusting it into a long futures position, a short futures position, a long short futures position, a short futures position. So what we've done is we've actively managed our delta, or our exposure to Bitcoin's price, through futures, not buying and selling the underlying asset, creating a messy, capital gains tax event outcome for us, which is much, much cleaner and much, much more sustainable. So when we're dealing with the price of Bitcoin, and this is essentially a delta chart. Now, the gradient of our Bitcoin is the delta. So we've got our P&L and our Bitcoin price. Now, if the Bitcoin price goes up, our P&L will go positive, and if the Bitcoin price goes down, our P&L will go negative, and that's all very, very sad, but we're fine. Now, what we want to do is we want to shift and rotate our exposure to Bitcoin by adjusting our delta. Now, one delta can be, just owning 100% Bitcoin, or you could own 0% Bitcoin. You could have 100% cash, but you could have all your exposure in long futures. And so there's many ways in which to cut the cat in terms of your delta exposure. Whereas if you want 70% delta exposure, you might have 70% Bitcoin, 30% cash, or maybe and what I'm advocating for is 100% Bitcoin, but you have 30% of your Bitcoin exposed as short futures, and so you have a 0.7 delta. And that means that if Bitcoin's price goes up 1, your P&L goes up 0.7, or if Bitcoin's price goes down 1, your P&L goes down 0.7, right? And so that is how we can dynamically adjust our exposure to Bitcoin without selling underlying Bitcoin. To conclude, I think like a risk manager, don't think like a trader. HODL your Bitcoin. Adjust your exposure to in terms of your exposure to Bitcoin price through the financial markets, not the physical markets. Don't use a lot of leverage. We're not traders. Don't be a trader. We're not playing a trading game. We're trying to adjust our delta exposure dynamically in order to increase our stack. Don't get caught up in tax concerns. If you're paying tax, you are making money. This is a good thing. And so pay your tax. It's a good part of your strategy. But don't generate unnecessary capital gains exposures or events. Use the financial markets to your advantage. Obviously, this varies by jurisdiction, and you're going to have to get advice depending on exactly where you live and how it works for you personally. I don't provide financial advice. Apologies. And tell me, what do you think of my new avatar, the Mangosteen avatar? Can you see in my face my passion for what I'm doing? And I'm trying to help you guys learn things about Bitcoin and finance and investing and all these cool things. But rather than show my ugly mug, you can see this cool little Mangosteen dude chatting away live. Hey, don't forget to like and subscribe. If you're wondering who I am just a humble Mangosteen with a background in finance, economics, accounting, and engineering, and professional experience across corporate strategy, finance, including time as head of investment and treasury for a multi-billion-dollar corporate. And I want to cultivate the next generation of active investors from suits to steel caps through renegade financial education and strategy. If you've liked what you've seen here and you think the tools that I'm using are really, really powerful, which I obviously believe that they are, you can acquire a 2-year license at the moment through Mangosteen Private. Check out my website, mangosteen.global. There's a 5% discount when you pay in Bitcoin, and there's obviously a 14-day no questions asked refund policy. So if you buy it and you decide it's not for you, then feel free to email me and I will refund you, no worries. And disclaimer, this channel does not provide financial advice or any advice of any kind. Everything is for general information and entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.